Hey everyone, I just completed a market update presentation for a local real estate firm, and I figured I'd go ahead and share the slides with you here on social media. For those of you that don't know me, my name is Sean Brown. I'm the president and CEO of California Lending Group. We are a mortgage lending company located in Orange County, California, offering residential financing for all consumers in California. So let's go ahead and jump right in. The first slide we're looking at here is a chart of the 10-year Treasury. You can see down here this was roughly August of 2020, just after the Corona pandemic started. We hit an all-time low in interest rates. It was about 2.5% or so. And this is the lowest that rates have ever been since we've started tracking 1971. And then rates steadily started increasing from there. We overstimulated the economy, and the Fed had to increase interest rates to cool things down. You can see we hit a peak recently here of about 6% for the 30-year fixed rate, and it slowly started coming back down recently. And this has created an interesting inflection point in the market. If you think back 6 months ago or so, people that were out, if you were trying to buy a home, and you probably heard that it was a feeding frenzy out there. Within days of property being listed for sale, we were seeing 10, 20, 30 different offers come in, oftentimes 5, 10, 20% over asking price. It was incredible. Things have cooled off though, with interest rates going up, and there's a little bit of fear in the market right now. And so I'm finding that borrowers that were discouraged and having trouble getting into homes are now re-entering the market and able to get their offer accepted. And yes, interest rates are higher, but they will come back down eventually. So the next slide we'll look at here is inventory. So you can see there's been a steady decline in inventory since 2012 here. It leveled off for a while, but it's been declining ever since. And that's because it's extremely difficult in California to build homes. The permitting process takes years of back and forth, and builders just don't want to speculate. There's a lot of costs that go into building a new home, and because our current administration makes it so difficult, especially in this environment, builders are just not incentivized to build. So we have inventory going down, which creates a bit of a supply and demand divergence. We have a ton of supply or demand for properties, but a low supply. And so that's going to continue to increase the price of real estate. This is the inventory on a national level. I just thought it was interesting to show that it's not just a California problem. Nationwide, we're having decreases of available inventory. We're not building as much as we need. This is a chart of the median sale price for some of our local counties here in California. You can see a sharp pullback recently within the last few months. We've had about a 5% reduction in our local markets. And it's creating, again, a buying opportunity. We're seeing the days on market creep up. And I think with the reduction of interest rates, I think as access to capital becomes cheaper, you're going to see more competitiveness in the market. So, I think that over the next 2 to 6 months, I think we're going to have a lot of incredible buying opportunities. So this is the percentage of price drops year over year that we've seen. You can see we've had a sharp increase. And this also creates a good buying opportunity because of the fear in the marketplace. Sellers are price dropping and taking offers lower than listing price. The next chart I want to go over is the cost of waiting. And so this assumes that we're looking at a $975,000 purchase with a 10% down payment on a 30-year fixed rate loan with an interest rate of today 5.499. Now, this is cheaper if you're putting 20% down, but the less money you put down, the higher the interest rate because the lender considers more to be a riskier loan product. I used an interest rate of about 5.5 for for each year. So this is assuming that interest rates stay the same. This is also assuming that we get back to our average appreciation rate of about 4 to 5% a year, not the 20% we've seen recently. That's not realistic. And so this also assumes mortgage interest of around $200 to $300 per month, gradually increasing over time. Oh, okay. So if you look at the payment difference from year over year, you can see waiting 1 year ends up being about $300 in a difference in monthly payment. 2 years is $600, and 3 years is almost just over $1,000 a month more that you'll be paying in your mortgage payment. Then we have loss of property appreciation. So this assumes the increase of 1.95 or about 2% for the first 6 months, 5% for the first year, and so on and so forth. So you can see here, waiting 6 months, loss of appreciation 20,000, a year 50,000, 2 years just over 100, and 3 years almost $200,000. And then the next line here is loss of amortization loss, which is the amount of money you're paying down in your principal every month when you make your monthly mortgage payments. Unlike renting, when you make your monthly mortgage payment, you're paying interest on the loan, but you're also paying down your loan and building equity. And so that's this number represented here. Cost of waiting for 6 months is about 6,000, all the way to 3 years of 40,000. Add those two numbers together, and you get almost $250,000 over the course of the next three years for Orange County property, or really any Southern California property in that $950,000 range. This is that same data, but represented over in a bar chart. It's just easier to look at here. And then we also have cash required for down payment. So as properties become more expensive, the down payment required goes up. And so in 6 months, you'll have to put down another $2,000, 3 years, another $20,000, just about $20,000 for this same property. And then this is a bar chart showing the loss in monthly payment. So the same data we looked at, just represented in a bar chart. What this doesn't consider is the tax savings that you see in homeownership. So you get to write off your mortgage interest deduction. And on average, I see a homeowner save anywhere from $200 to $500 in their taxes by writing off their mortgage interest every year. And then something that oftentimes gets overlooked is the security aspect of owning real estate. And I don't hear a lot of folks talking about this, but it's come up a lot recently with the pandemic. And that is that when you own your home and something happens, a pandemic or a job loss, you get sick and you can't make your monthly mortgage payment, lenders are not in the business of buying and selling real estate. They don't want your home. They want to service your loan and collect interest. That's their business model. And so they want to work with you in every way that they can to keep you in the property. And so if you can't make the loan payment, you'll call the lender and you'll say, hey, I'm struggling right now because of X, Y, and Z. They'll 9 times out of 10 offer you what's called a forbearance agreement. And those terms are typically either 3 or 6 months. And it gives you a pause in your monthly mortgage payment until you can secure your income, your health improves, whatever it may be, until your hardship turns around. I've seen those forbearance agreements go out as long as 12 to 18 months. Lenders will work with you. Versus if you're in a rental, if you call your landlord and say, hey, I'm struggling, I can't make my payment, the landlord doesn't care. 9 times out of 10, they're going to say, hey, I'm sorry, I've got to start an eviction, and you're out within 30 days. And so at the end of the forbearance agreement, you have a couple of options. So after the 3, 6, 12 months comes up, you'll call the bank and they'll try to work with you to cover the total debt owed, the arrears. But if you don't have the money saved up, then what they'll do is 9 times out of 10, they'll take the arrears and roll it into the loan so that you get a fresh start and you just resume making the monthly mortgage payments when you can. Yes, it is an incredible financial or a wealth building tool in real estate, but there's also that security aspect that's oftentimes overlooked that should be considered. So if you have any questions, please feel free to call me. You can reach me anytime at 949-500-1289. If you found this video useful, please like and share, and I'll see you in the next one. Thank you.